One of my favourite trading patterns is the symmetrical triangle. It's a great continuation pattern and it can be a precursor to a powerful move in the market. In this video, I will show you how to identify the symmetrical triangle pattern and also how to trade it. I'll give you some examples from my own trading of how I've traded the symmetrical triangle pattern, and we'll look out to see if we can see any potential in the market for symmetrical triangles that may be forming at the moment.
In this video, I'm going to outline to you how to trade the symmetrical triangle pattern as a continuation pattern. And the symmetrical triangle pattern is a really great pattern for trading. Particularly, it's also known as the coil, particularly as a continuation pattern when you've got a real strong fundamental basis for trading a commodity or an index or any other instrument. The symmetrical triangle pattern is one you need to have under your belt, and I'm going to show you a trade which I took using this symmetrical pattern on gold earlier in the year. I'm also going to show you a trading pattern that formed but didn't break, and I'll show you how I made a mistake in my trading when I saw this setup appear. So I hope this can be a good learning session for you on trading the symmetrical triangle. Now, the symmetrical triangle, first of all, we want to look at identifying them. Now, identifying a symmetrical triangle is relatively straightforward. Another word for the symmetrical triangle is the coil, because you see price coiling down, and like a coil, when you press a coil down, it then springs up. So typically, when you see this coiling action, you tend to see explosive price action if and when it breaks. So it's usually a continuation pattern. It represents a kind of pause in the existing trend, after which the original trend resumes. So you can see here in this example, the prior trend is up, then the resolution that's favoured is a break to the upside. So it's usually appearing in this continuation fashion. Now, the minimum requirement for a triangle is that you have 4 reversal points. You need to have a minimum of 1, 2, 3, 4. Now, in order to draw these 2 converging lines, what you need to have is each of these lines has to be touched twice. So you need point 1, point 2, point 3, point 4. Then you've got the 4 touches. That's the minimum you need to form a symmetrical triangle pattern. Now, if you put 2 more in, often you will see symmetrical triangles that have 6, maybe even 8 touches. But the minimum you need is the 4 touches. And then you draw these 2 lines together, and where these 2 lines meet, that point is called the apex. Now, there is a very interesting time requirement of these, and now do note this. Generally speaking, price should break out in the direction of the prior trend somewhere between 2/3 to 3/4 of the horizontal width of the triangle. So if this is the base of the triangle, the apex equals the pinnacle. So you want to see a break somewhere like between 2/3 and 3/4. So somewhere between here and here. Now, if you don't get the break by this point and price keeps going, you tend to see price just smooth over the apex, go up. It tends to ruin the pattern. So remember this time element of the symmetrical triangle. You want to see it break 2/3 or 3/4. Now the way you measure it, this is the base, that's the top. So it's 3/4 to 2/3 of this distance from the apex to the base. Now the targets. How do you determine the target? Now the obvious target is the height of the pattern. It's the general rule of thumb with all technical patterns. You just aim for the height of the pattern. So potentially this is the height, this base here, so you can aim for the height of the pattern. So take that measurement, put the measurement here, and then you'd aim for a target at an extension of the pattern. Or you can draw, if there's a trend line, you can draw a trend line across the top of the first point and have that as a pattern. It's up to you, and obviously if there's a fundamental change in the market, then that can be a reason to close the trade in and of itself. Again, remember with all my technical patterns, do combine them with the fundamentals. when you have a fundamental basis for a trade plus the technicals, it really does help the likelihood of the trade going in your direction. So make sure that you do use that and take advantage of that. One other point. Now, if you're trading this in stocks, you really want to see falling volumes as the pattern forms. So as the pattern's forming, 0.3, 0.4, 0.5, 0.6, you want to see volumes dropping, but then to the upside, you really want to see an increase in volume. So if volumes are increasing on the break, that's what you want to see when you're trading this in a stock. So let's have an example. So here's an example of a trade in gold where we had the symmetrical triangle pattern. So we have 0.1, 0.2, we now have the base, 0.3, 0.4. Okay, then we got 0.5, we didn't get a 0.6, and there we saw a break. Now the way to enter this is enter on the break. So with the break of the pattern, that would be your entry signal. Now here, you can see that I had a very bullish fundamental bias for gold. So in this environment, I saw 1, 2, 3, 4, aha, there's a symmetrical triangle pattern forming here. And I was very confident around May of this year that the break would be to the upside because of the fundamentals. So I entered the pattern early. You see, this is the beauty. When you combine fundamentals and technicals, you can see, 0.1, 0.2, 0.3, 0.4. It's got the symmetrical triangle. It's a continuation, expecting the prior uptrend to resume. Then I got the confirmation. Ooh, that's good news. Then we've got another update. That's great news. And then this day I was hoping for more. There was some fundamental trigger that just sort of reversed the situation, and I closed my trade out. So there was a good trade, and I entered prior to the break of the symmetrical triangle. Now that can be good, but also sometimes that can go wrong. And I'll show you how that went wrong for me in a recent trade. And it was a very, very similar setup. We had a kind of symmetrical triangle pattern forming on the daily chart on gold. Again, the fundamental bias was to the upside. And just prior to the FOMC, I entered long around this 1980 level. Didn't wait for the break, you see. And I didn't wait for the break, and I've had to endure all this drawdown. And I've just recently closed the trade out for a very minor loss. I added to my position here, so I closed with a net profit. But here, that's the danger. If you're entering in before you get the trigger, like I did, that you can do it, it's fine, but it was a painful bit of drawdown I had to endure. So there's a lesson for me. So a lesson for me is, look, just wait for the break. It would have been much simpler, and I would have saved myself all that heartache of waiting for that drawdown and also potentially risking a deeper pullback down to that major 1820 support levels. That's a learning point for me. Yes, you combine the technicals and fundamentals together. They're the best trades when they're both going together. I got away with it here, and I got away with it there. But I ran more of a risk than I would have liked to. Okay, if you found this helpful, please follow me on Twitter. You can get loads of my analysis there. LinkedIn at Giles Coghlan. Email me at giles.coghlan@hycm.com. And you can contact me directly for some great programs I've set up to help traders take their trading to the next level. I really have got some great programs that would really help boost you. So if you're learning to trade, you want to learn to trade, you don't know how to do it, you've been sort of bumbling along, break even, losing, getting confused with the fundamentals, not sure on a technical system, message me and I can help put you on the right path. I've been there. I learned to trade from a retail perspective all the way back in 2008, 2009, and I've walked that road to where I've got to today. So I know how to help people follow me and the path that I've taken. So please do contact me, and on any of these mediums. If you like this video, give it a like, give it a thumbs up, share it, promote the channel, always much appreciated. And thank you very much for your time watching this. I hope it's been a benefit to you. Goodbye.